Good morning, guys. Sermon from Cool Trading Tools here. So, I know I've been gone for a couple weeks here, so sorry about that. I've been working on a sprint for my app, Cool Trading Tools here, so I was having to put a lot of work into it recently. And yeah, I would love if you guys went and checked it out. It's free to sign up and use. I think there's a ton of value in it, and definitely worth giving it a look and put my heart and soul into it. So we'd love for you guys to go check it out. It's free to create an account and start using it right now. So yeah, so that's what I've been kind of missing. I've been really working hard, sprinting at that for the last couple weeks here. But yeah, let's get into the pre-market analysis here. So we're gapping down today. To be honest, I wasn't able to really find a ton of concrete news on why it is. You know, a mixture of the ceasefire ending and fears of rate increases, I would say, are as good a reasons as any. I think the short term plan off the open is actually pretty obvious to me personally. We'll see if it plays out. I think the longer term is a little bit more ambiguous. So let's start here. We'll start with my two favorite during this kind of market correction and range that we're in. I've been really focusing on the NASDAQ and semiconductor space. I think right now, let's just go simple off the skip down. I think given the recent market environment where we've been just grinding up for the last couple weeks, pretty bullish. Names are really kind of getting good bounces going. I think that is reason to look to bounce off this gap down for the open. This is for day trade specifically, right? So like a 5 to 20 minute trade, right? Maybe longer, it depends on your style. And if you're more familiar with this, my average trade length is about 15 to 20 minutes. So that's why I say that is my range, because it's usually what I kind of feel comfortable projecting out on, and depends on the situation. But so two things. First, let's just look at the semiconductor here, right? So first off, super bullish environment. We've bounced up 18% off the lows. If you look at the hourly chart, we're kind of gapping into this little range of support that it had. So we're gapping into support, and we've been in a generally bullish environment, which usually sticks. People are gonna do what's been working off the open, especially. They're gonna look to buy this gap down. I think is very likely. And same with the Nasdaq. We've kind of gapping into this kind of support range here from the last few weeks or so. So I think to me, the actual obvious trade right off the open is to look to buy this gap down. Could go right off the open here. I think you can look for an opening range breakout, to the upside, or maybe ideally the best is when you get a push down, a fail lower, like at the at the pre-market lows, and you get like a break hammer candle up. But we'll see. I think those are probably the two techniques I would look to get in. I think it's gonna normally I might look for a 5 minute trend change. I'm personally expecting a quicker bounce. So that's why I go to like a 2 minute opening range break, a 5 minute opening range break, failed breakdown right off the open. Much more unlikely, but given the market environment's been aggressive, oftentimes I might use like a bounce right off the open. So if we like shoot right off of opening right off of the open, I might buy the break of the pre-market, kind of this area highs, and put a stop, at the low of the candle of the day. And that's a very less likely trade to work, but it can work. And it depends kind of almost the exact situation the minutes before the market opens. So it's tough to see if that's a valid setup right now. But those are 3 ways I would consider to get in here. Relative strength. These NBIS and CoreWeave and I think Iron, they kind of run a little bit of a bucket with what they do for AI. And this NBIS and CoreWeave also recently had earnings here. Great gap up. We're pushing into the all-time highs here, right? So I don't personally expect just to bust over here at the moment. I don't think that's the most likely case scenario. But what's the noticeable thing here, right? First off, strong earnings, so it has a fundamental driver going with it, but then also relative strength. The market's gapping down, CoreWeave getting bought up earlier than the rest of the market and holding up. So relative strength. From a day trading perspective, I'm not sure. It's not like my favorite thing, but I think this is one you want to keep an eye on in the coming weeks. The range is still great. Its earnings are recent and it's showing relative strength for the bulls. So I think this is a good one to keep an eye on as like your main watch list. And just remember that it's performing better than the overall market. And this is a sign today that it's kind of a little bit stronger. So another one, this is a little bit for more speculative people, and that's not for everybody, but this WETO has decent liquidity. A lot of these small caps, they don't have enough liquidity. I won't trade them, but 63 million yesterday, 34 million on that huge squeeze. Now we're gapping up another 70%. We're up over like 1,200% in the last 3 days. I think this is definitely a short candidate off the open if your broker has shorts, or a lot of you guys, if you're using those funded traders, a lot of them, they don't actually need to actually borrow because they're trading fake shares, so you can just short those using one of those funded brokers as well if you have an account on those. So I think that's definitely a good one to watch at the open. Oh, one more thing too, I'll come back to NBIS in a second. So I think this is a good one to watch if you have shorts available. It's not an easy trader, and these are not for the faint of heart. They halt, they have huge range, and they take a little bit of skill to get in. I think just it's more from a directional. It's likely to come down today on this gap up. Just seen this setup a lot of times. Execution is the difficult part on these because they pump, fake out, drop down hard, bounce 30%. Then they're just not easy to trade. So you should have a little bit of experience and skill in that before you start to even approach that. On top of this, like I said, check this out, guys. I put a lot of work into it. FinViz on the NBIS too. Another reason I'm keeping an eye on it. It's already kind of taking place, but so if you need, this is a great free tool, FinViz. I'll go here and check the short percentage on it. So it's got anything over 10% is really, you're looking pretty good for squeeze potential. I mean, it's not like a rule of thumb at 10%, but when you get these things that are pushing and they're at almost 30% short float interest, so 30% short interest, that's a really good reason to keep an eye on this. That like the squeeze is already getting started. I mean, this thing has pulled down 50%. Now, since it's low, it has bounced. So I'm a little bit hesitant to buy it on today. Just the move has happened a lot, but it's up 100% in the last few weeks. But if this thing wants to keep going, there's a lot of people that were probably like holding through this and they're looking for the long term, like fade this thing for a multiple year hold because the market's looking pretty nasty. This is a good one to keep an eye on for short squeezes. If we break all-time highs, like buckle up because 30% is a huge short interest on the float. So just keep an eye on this one. You might even want to set you want to keep an eye on it. You can set an alert at 300 to see if it breaks, but just keep an eye on the price action beforehand here and see how aggressive people are buying. Are people really underwater? Which they are likely. So yeah, awesome guys. I hope you have a great trading day. That's it for the day today. And we're out.